Okay, it is Russ and Reed with our infamous Coffee and Keys. Reed, are
Here
you
we are.
down? Are you
Yep,
down with the sickness?
I'm down.
All right. So today we have a special guest, Jason Skelton with Pacific National Lending, and we asked him to explain what bridge loans are because we are seeing a lot of people want to buy a house, but they have a house to sell, and these can come in very handy for contingent buyers. Wouldn't you agree, Mr. Reed?
Yeah, as a matter of fact, that's probably one of the most common uses for them is when a buyer has a home to sell, but either they're not ready to sell it yet or to give them a competitive edge, they don't need to write their offer contingent on the sale. And so a bridge loan can be used as the same as cash situation to purchase that home, and then they can list and sell their home after the other one closes. The other situation where we can use these kind of loans are when there's simply multiple offers on a property and you want to, once again, give yourself a competitive edge, not necessarily contingent on the sale. But when you got lots of other buyers going after the same home and you want to look the best, you can write a bridge loan as a same as cash type offer and then hopefully be the winner in that situation.
Good.
So,
Jason?
Jason, how about if you tell us a little bit first about who you are?
Perfect. Well, thank you guys again for having me on your show. I really appreciate it. My name's Jason Skelton. I am the broker and owner of Pacific National Lending. I got in the mortgage business in 2002 and opened up this brokerage in October of 2006. So I've been doing it for quite a while now.
Beautiful. How about you explain the mechanics of a person getting a bridge loan? How does that work?
Definitely. Bridge loans are really structured mainly with equity. So generally speaking, it's going to be really targeted towards buyers who already own a home or several homes. And we can forego any underwriting and appraisal needs simply by attaching and using the equity in their other homes to secure the loan.
Very cool.
So, and we're going a little bit off here, but if somebody doesn't have another home or equity in another home, and they are in fact just like maybe a first time home buyer, and they still qualify to purchase, what's the difference there? Is it's just primarily the down payment lending amount, or how does that
Yes.
work?
Yeah. If they don't have another home to securitize, we would be able to still do this private type financing for them as long as they had a sizable down payment that they were coming in with. Then we could make up the difference with this bridge loan to give them a quick, easy close.
Cool.
And what's the criteria overall that you look for?
Main thing is equity, and then other than that, we just look for the exit strategy. These loans are designed to be very short term, so we want to make sure that we know what their intent is for getting it paid off within usually a couple of months, either with a refinance or with a sale of another property, and then the proceeds from that would pay off the loan.
What kind of costs and rates are we talking about in term? Because we know that this is not a first time home buyers FHA kind of situation. These are people that found their dream home but got a house to sell typically, and so we know costs, rates, things like that typically tend to be higher.
Definitely. These loans are known for having very large, high upfront costs, and that's kind of where I get my competitive edge. I really try to structure these with zero upfront fees, no points, no origination costs. I really do this just to help create a relationship with the realtors and with the borrowers and hopefully become their go-to lender. So, as far as the interest rates are concerned, you're usually looking at about 12% on it, which calculates out to 1% a month. So, if you were to borrow 300,000, you would plan on that being about $3,000 a month in interest, usually only for 2 to 6 months, and then you should have that paid off and be in your permanent loan at that time.
So speaking of permanent loan, which we commonly call a takeout loan, how do you how is that structured? I imagine you want to know what that looks like from the beginning, huh?
Definitely. So yes, if like I said, when we want to look at really what the end game is, if they're not going to be getting enough equity from the sale of another property to pay off the loan, I will run them through the full pre-approval process for that takeout loan to make sure that there's going to be no surprises or hiccups for them once they've moved in and are ready to switch over to that takeout or permanent loan at that time.
So, in all the years of real estate, the one lesson I've learned is that there's no good surprises in real estate. So, we're going to assume there's no surprises in getting a bridge loan.
Correct. Yeah, we will do all the work up front to make sure that nothing comes up in the 11th hour on this. Like I said, we'll make sure that the funds are ready and secured and ready to go for the close of escrow, and we will make sure we know what the exit strategy is ahead of time and make sure that all the approvals are in place so it'll go seamless.
Beautiful.
Well, that gives us a pretty brief but descriptive idea about what bridge loans are, how they can be useful to buyers in this market, and hopefully the people watching this will have some new knowledge about this product that is available to them.
So, just to wrap up, any real estate questions? That's what Reed and I are here for. Jason, we will give you their contact information, or we'll give them your contact information. But this could be a great product for even buying a new house when you have a house to sell. Most builders won't take a contingent
Absolutely.
offer. So this is kind of a critical deal if you are looking at new construction as well. So once again, give us a call, shoot us a message, email, text, Instagram, all that fun stuff. We do technology, because we're hip like that. Thanks for watching.
You do
Thank you,
more
guys.
so than I. Cheers.